Let's bring in Oliver Sloup of Blue Line Futures in Chicago and try and make some sense out of this. Oliver, we're chopping around all over the place here this morning. Corn market's still flat. The soybean trade's still pretty flat, but everything else starting to bounce. This is after we had some overnight export sales of soybeans, but all in all, what's really driving the market? It just seems to be meandering right now.
Yeah, I think we're just in that time of the year where you're going to start to see a lot of choppy trade on both sides of the market, which for shorter term traders presents a lot of great opportunities. If you look at the corn contract, for instance, that March contract for the better part of the last month, we've been mostly range bound, 560 on the bottom end of that range, 590 at the top end of that range. Look where we're at right now in the mid 570s. We're smack dab in the middle. So not a whole lot of conviction for bulls or bears when you're in the middle of a month-long trading range. We'd like to sell the top end of that and buy the low end of that for a little bit better of a value trade. Now, on the soybean side of things, we're still a little bit more upbeat. Sure, we're down a little bit today, but we are starting to see the export sales pick up a little bit and see some more flash sales. Hopefully, we can continue to see that happen on a more consistent basis and a larger basis as well. Technically, we're trying to mark higher lows and higher highs. We haven't quite marked a second consecutive higher high yet, but if we can get out above last week's highs, I wouldn't be surprised to see this market make a good push at that psychologically significant $13 handle, the catalyst that we're keeping a close eye on here going forward. Obviously, that weather in South America, if that continues to be a little bit drier than expected or needed, you might see some premium come back into that market.
But, you know, Oliver, I was talking about this late last week where, you know, think about it here in the U.S. The hottest, driest part of our growing season in the U.S. would be roughly about a month or so after you have the longest day of the year, right? So that's like around June 21st or so, but it really gets hot in July and August. Now, in South America, we're almost at the shortest day of the year. Wouldn't you expect the most heat to kick in about a month or so away yet?
Yeah, exactly. And I think that's what the market is started to price in at the end of last week as some extended forecast. We just saw a sharp rally off that pullback that we saw last Monday and Tuesday, which I think was largely driven by a lot of the outside markets that sold off early in the week on the back of the new COVID variant. Those fears have mostly subsided as we're starting to hear a lot more friendly news in terms of it being widely transmissible, but maybe not as lethal. And that's a good sign for the markets. And so the market's basically retracing those breakdown points from last week. And South America weather is going to be a big one to keep an eye on. If concerns continue to linger, I wouldn't be surprised to see some premium come into the market. We know that the funds have a relatively small net position in soybeans. So if there is a catalyst to get these bulls excited, they've got plenty of powder to add. That's for sure.
I did want to bring in a couple of features here. The U.S. dollar index. I've been watching this morning, and it has shown some firmness now. We're getting closer to the upper end of our trading range today. So December U.S. dollar index futures are at 96.325. That's up a little over 200 points right now on the day. And I've been watching this Dow. The Dow Jones Industrial Average futures have December 592 points higher. The March also 592 higher. So the March is now at 35,073. So pretty good strength showing up here in the equity markets, and the dollar is starting to firm up. And you have the crude oil trade also higher. January futures for West Texas crude are up $1.63 at 67.89. That's not very often where you have all three of those going up at the same time there, Oliver.
Yeah, it's not. And obviously, it's kind of, we alluded to, a lot of the good news coming from the new variant, that it might not be as lethal. That's got the outside equity markets excited. And you just got to remember that we were under a lot of pressure early in last week. So we're retracing a lot of those breakdown points, not just in the equities, but also the crude oil market. I almost said energy sector as a whole, but natural gas is not getting any love here recently, sharply lower here over the last several weeks. And that could be a big one to keep an eye on as well when you look at the cost of fertilizer prices and how it correlates there, and with the corn and the bean markets as well.
Right at 366.9 on January futures right now. And gosh, I remember not very long ago it was over $6. Good point.